Take it across to Priyankar Biswas, India analyst, industrials, logistics, and metals at BNP Paribas, joining in on the show right now to talk about the stocks that he's liking. Priyankar, hi, afternoon. Good to have you on the show. Let's start off with L&T because that's been an impressive set of performance. But given the kind of valuations that the stock is scoring at, what's your take on both the stock as well as, of course, the earnings visibility going forward?
Yeah, thanks for having me here. So on the L&T, I would say that the results were a surprise on the positive, I would say, especially on the order inflow fronts. So the domestic order inflows came flattish. So given that it was an election season, so we were kind of expecting some softness in the order inflows. So that clearly did not happen. And then the international orders have been quite strong. So something we have been focusing on for quite some time. And essentially, what we see is that the margin guidances and revenue guidances all have been kind of read. The only negative that we see is probably the somewhat bit of a cut in the prospect pipeline by around 10%. But having said that, it seems the management is quite confident that they would deliver even 10% order inflow there and requires a 20 to 23% win rate. Probably that may also be achieved. So not an impossibility. So I think in that sense, given that post the budget, there has been some drop in the stock prices as well. So I think I would say that it is exactly quite expensive on that front when we look at the broader cap good space.
Expensive. Hi Priyanka, Anish also joining in the conversation. You recently initiated coverage on AI as well with a buy stance and overweight rating. Tell me what's the rationale there?
So AIA has been kind of a, you can say, a structural story. So essentially, that's more or less like you can say a shift from a forged media that is used for mining industry to a better product that is high chrome grinding media. So essentially, what we are seeing is that AIA has been on an upward trend, especially in terms of the margins. They have been quite good as well. And in the past few quarters, we may have seen that there have been some volume pressures that they have not been able to deliver on the conversions. But given they had witnessed some favorable rulings, especially in Brazil, that anti-dumping duties have been removed, and possibly we can see that going forward in Canada. So we think that eventually, at some point, probably in FY26, the volumes comes back in quite a meaningful way, and once the volumes comes in, and the earnings also starts reflecting accordingly. We think there is a scope for significant up move in the stock in that sense.
Okay, and before I let you go, a quick word on JSW infrastructure as well, because of course when the stock listed, it appeared quite cheap versus Adani Ports, but by any yardstick now, the valuations aren't really comfortable. What's your view on JSW infrastructure? Because they've gone ahead and made a couple of acquisitions. Does it turn around the, the fate of the company as per you?
See, it's pretty easy to say that the valuations are expensive. Just make it maybe just looking cursory at a EB by EBITDA angle. But I would say that not really the way to look at it because if we see that it's a net cash company, so the amount of expansion that it can do is actually quite humongous. So we have actually calculated that while the management says they can do a 300 billion odd capex over the till FY30, they can probably do more more closer to like a 500 billion, and kind of this acquisitions that are happening on the inland logistics side of things, including let's say the slurry pipeline sort of things, that should drive further growth that is probably not getting factored in. So if we get something of an asset at a 18% plus ROC levels, then I think there is a substantial scope to even move up from here. So potentially in a range of 360 to 400 is that's how I will say. I mean, recent slurry pipeline acquisition, we highlighted in our recent report that that asset at least can make like an 18% to 21% ROCE. And why does it matter? Because when it starts up in FY28, in our estimate, that can be even more than 20% of the EBITDA there. So it is quite material as well. So going forward, more acquisitions happen like this, then we see a significant up move there as well.
And just a quick word, Priyankar, on the overall budget that we saw that just happened over the weekend, over the week, I beg your pardon. Were you a bit disappointed by the capex allocation because there wasn't a big jump there, whether it was road, railways, defense, it was pretty much status quo, as was the case in interim budget as well.
You are right. It's kind of exactly a mirror image of the interim budget, and I was expecting at least that because of the large RBI dividend that was there of more than 2 trillion, that close to, let's say, zero point 0.6 to 1 trillion additional allocation probably could have been made for capex. So that was clearly lacking. So I would say that was a disappointment. And on top of that, for roads and railways, the growth has been kind of single digits. So these have been the heavy hitter sectors earlier. Now, having said that, one positive or silver lining that I see is the increased allocation to urban housing. So I am including the extra budgetary resources as well. So the total increased allocation is something like 0.37 trillion rupees. That's the only material positive that I see in the budget at the moment.
Priyankar, great to have you on the show. We'll let you go on that note. Thanks for taking the time out and joining in today. Adani Green numbers.
If you like this video, then like, share and subscribe to ET Now.